analysis. Today is January 15th, Monday. From the last video had been almost a week, so it's a usual January for me, I guess. Not really that aggressive to trade the market. I still placed few trades between the last video and this video, but anyhow, let's get into what had happened. So January, the first thing so far, we are already in mid-January. Time goes really fast. The first notable thing, of course, is this global risk-on sentiment. So if you have been reading the news, you'll see it's pretty much all very positive news. It's very rare we have this kind of a positive sentiment globally. Haven't been happening for quite some time. So of course, from the U.S. equity to Asian, European, everybody is celebrating a good economic year so far. And if you take a look at the commodity price that's right now in front of your screen, the commodity price also has been rally. You look at the copper market, you look at the iron ore, you look at the gold price, and you also look at the WTI. Everything rally to the upside. Now, in terms of major central banks, you have Bank of Japan, who has always been very dovish, actually came out today and came out today or Sunday, Asian time, and give a quite hawkish comment, saying that inflation had picked up. They're very looking forward a very good economic growth. And you had a similar pattern happening in ECB. Now, ECB was the biggest surprise because we already had a couple members came out giving a very hawkish comment. Now that is something you need to understand, because what happened in Europe in 2017, why we have a lot of euro sellers or buyers, things like that, it was never about the economy. Okay, because if you look at the data of the Eurozone, it had already been a very steady uptrend. So what caused euro to have sudden drop last year was all sentimental base, and most notably is the ECB. The reason is because if the decision maker, the person or the entity that has the power to stop the quantitative easing or to hike the interest rate or to cut the interest rate, if the person change the direction or shift, that will be a significant impact. And that's what happened in 2018 so far, that ECB completely changed the direction to the upside. So obviously that's very positive for euro. Then it comes to Bank of Canada, same thing happened. They have a very positive job data which fill up this rate hike expectation that is about to happen this Wednesday right here. Okay, so I see expectation is a 0.25% rate hike. And what happened to other central banks? All in all, it's a very strong risk on sentiment and strong market. However, that does not mean the party is going to continue forever, right? A lot of people already have this doomsday perspective, saying that this is just the end of the big bubble burst. Now, I don't like to guess what's going to happen, because for me, frankly speaking, I really don't know or don't think anyone can predict, especially for the timing, right? We might really at the end of the bull year, since it has been for a bull market pretty much ever since 2009, I think, if you terms of S&P. So pretty much it has been up for almost 10 years. That's really a general economic cycle. You have 7 bull years and 3 bear years, things like that. So it has been a very long bull run. However, nobody can predict the timing, so it's best if you don't get into that habit. All right, so let's just get into each currency market, and I'll tell you what happened. So of course, first thing, let's look at the major currency index. If you look at DAX, you see what I draw here. I think in my last video I was saying that dollar might rebound because 91.32 seems to be a very strong support, and that was the case. And we have this regression channel, and this is a daily chart. And I was looking for it to break out to the upside, and maybe we have a roadblock at 95, 97 respectively. However, that was not the case. Dollar continued to drop and break below this very important 91 handle. Today we are at 90.46. Now, that's obviously a very negative picture for US dollar. But this is the price action side. So let's take a look at the fundamental side. So what happened? Why do people keep selling US dollar? The first thing I understand, yes, Federal Reserve is going to hike interest rate probably 2 or 3 times this year. That's their agenda. But regardless of that aspect, you have to understand that's not something new. That had already been priced into the market. So what is a bigger fundamental reason for people to sell US dollar? It's because we simply do not have enough inflation for the Federal Reserve to change its mandate. So if the US inflation continue to remain low, then the Fed is not going to hike interest rate more than 3 times. And that means the market will not change its bet for the US dollar to the upside. Okay, so another thing to understand is that Fed is not controlling the market. So basically what the Federal Reserve is doing is to respond or react to the market reaction. Okay, this is a very important concept. So the market will always take a more dominant role, and the Federal Reserve will try to stabilize it. That means if you want to know what's going to happen to Federal Reserve, you want to see the inflation data first. As we can see, the inflation data for US, it has been growing, but it's not growing to a point that is out of control. It's not growing to a point that Federal Reserve has to tighten interest rate very, very fast in order to curb the inflation. That was not the case, for the US inflation. Another thing to understand is why we will have inflation. Okay, inflation obviously can come to a lot of different reasons, but in terms of US, the most prominent reason that we might have inflation in terms of people's argument is that the unemployment rate is at all-time low. So if unemployment rate is at all-time low, everybody's having a job, then obviously people are going to make more money, people are going to spend more money, the producer cannot hire more employees, they have to raise the wages. That was not the case for the US, and a lot of different people trying to explain why it's not the case. I don't really know if there's a correct answer, but all I know is it's just simply not the case. We see the average hourly earning is still at 0.3%, with the highest one is 0.5. It's still not going high enough to push the inflation higher. Now, third most important aspect, I think, myself, that I actually missing is that US dollar will always go up if you have enough buyer, right? This is a simple supply and demand. So if you have more demand for US dollar, then obviously dollar will continue to go higher. Now, what would be the demand for US dollar is when people wants to either invest in US, they need to do business here, or they want to buy US asset. Means if they want to buy the US equity, or if they want to buy the US bond. What happened right now is none of those are strong enough. So we see that although there's a lot of policy for like buy American, making American from Donald Trump, but the global market, the emerging market, is still taking a more prominent role in terms of the global economy. Second thing is, you probably heard the rumor that the Chinese government is thinking that they're going to buy less of the US Treasury. And that means that they are going to have less demand for US dollar. Because if they are not going to buy the US Treasury, they don't need to have that much US reserve. And you also heard rumors, or I'm not sure if rumor news, that the ECB or the Swiss bank are thinking to, I forgot which bank, but the major European bank, either ECB or Switzerland, are thinking to change their reserve. They open up to Chinese yuan. So there's a lot of central bank are basically they start to scale back the demand for US dollar. Obviously, because US dollar is losing value, that's the first thing. But second thing is that US dollar is losing the global global role in terms of dominance. So there's the last demand in a global scale for demand for US dollar. You have different central banks, they might change up their reserve. They maybe will reserve more Chinese yuan. They might even reserve more euro. But all in all, there's less global demand for US dollar. If that's the case, then that will be a bigger dominant role, more than the interest rate, more than inflation, and more than the Federal Reserve, because that's the fundamental supply and demand. If the global player, which is the country, right, different countries, if they decide they don't need US dollar anymore, then obviously they're going to sell US dollar in exchange for other currency. That's going to tank US dollar even further. So that is a very, very strong force that you do have to take into consideration. Okay, so that's basically what happened to the global view right now. And that's why I think US dollar continue to drop, regardless of a lot of people thinking, oh, isn't a Federal Reserve going to raise the interest rate? Yes, they will, but they're only doing that if the inflation is really going higher than expected. Then they might raise more. But regardless of the inflation, is that there's less demand for the US dollar. That's the major reason why dollar basically just keep dropping it. Okay, now of course, if you look at the price action, this is just a daily chart, so we might have a lot of rebound. Something to look out for is right now there's an excessive amount of seller in the US dollar, and it's also excessive amount of buyer in the euro dollar. Okay, so if you look at the futures contract, I don't have a premium service here. This is a free service, so I cannot really look way back. But if you just look at euro, just for now, you can already see that the large speculation at higher high, right, compared to a year ago. So we are really at an all-time high right now, and that's for euro. If you take a look at dollar is still, I think, neutral. Still neutral. That means there's still room for dollar to drop, but there might be capped room for euro to go up. Same thing as Japanese yen. You have a lot of seller into Japanese yen and really at a very low point. Okay, this is something you also have to take into consideration, because as a trader, this kind of volume will affect the market. Okay, so as I mentioned, DAX keep dropping, ever since the beginning of this year or from last year, or pretty much from 2017. Euro obviously is a very nice uptrend, same as British pound, and Japanese yen not so much. But the good thing is you stop going lower low, so basically it's a range bound. Now a lot of traders jump in to buy Japanese yen. I wouldn't really do that myself, because regardless of how hawkish the Bank of Japan has changed, the fact is that Japan is an export country. So they still need the currency to lose value. They still need currency to be lower than other currency in order to survive in the economy. So all in all, Japanese yen, yes, you have a short-term momentum and sentimental push, but it's really not a currency I'm interested in to buy unless they stop the quantitative easing altogether and the inflation, suddenly becomes so high. But that's not the case right now. So for me, this kind of short-term movement not really interested me. Commodity market, as I mentioned, continue to go higher. Now, do we have, aside from sentimental reason, do we have a demand? Is there a fundamental reason? Yes, for the copper, there's still high demand from China. And as long as the Chinese economy continue to grow, we will see a further upside to the copper market. The second thing is that Chinese is controlling a lot of, they are basically battling the pollution problem right now. That means that they are actually eliminate a lot of local producers. If the local producer produce a lot of lower grade commodity for copper or iron ore or something else, that will pollute the country more. So what happened is they will actually have more demand for the commodity from Australia. So of course the major beneficiary for this is Aussie, for these iron ore and copper. Now, major beneficiary for oil obviously is Canadian dollar. Now, oil from last year, OPEC passed the extension for the output curb deal. We have a couple new events. Of course, first is the Iran protest that shocked the market because people think the oil output will be disrupt. Then we have Venezuela continue to have a civil protest, civil matters. So all these fuel up the ongoing oil. And the most important thing you have to understand, why is all the commodity price shoots up, is because all of them is denominated in US dollar. So as long as dollar drop like what we have right now, commodity price will continue to go up. That means if you buy against US dollar directly, let me see, if Aussie dollar, dollar CAD will have a most direct beneficiary for this kind of correlations. Okay, so major currency euro dollar, obviously you can see from beginning of this year or even last week in this daily chart, it has really shoots up, and most important is it has broke above last year's high is 2092. Do we have a euro dollar here? Yes. Okay, let's take a look at 8 hours. So you can see it's a very, very strong demand. Basically broke last year's high 2092. Right now almost at 200 pips above that. So very strong momentum. Again, today we do have another hawkish comment from ECB member. Now, obviously, I personally not going to jump in and buying this, but I am in euro long myself. Very interesting to buy euro dollar. Obviously, I missed the trade. I couldn't find a chance to get in last week, and pretty much missed this whole rally. So we have to see what happened. I definitely don't want to get into more euro long at this moment, just because I feel like the position for the euro is really overbought at the moment. So I want to wait for at least for it to drop first, because a lot of positions overextended. So that's for euro dollar. And cable also rally. Now cable rally, not so much for any positive news. I know there's a lot of speculation for a soft Brexit. Prime Minister May shuffle her cabinet. All those things sounds like the major reason, but it's not really the major reason. Really major reason for British pound versus US dollar to rally is because dollar weakness. Okay, so tomorrow we will have an important data from UK, which is the CPI. That means that will be, if this CPI, the expectation is lower than last time, but if we have something 3.1 or higher, then obviously cable will continue to go higher. So does British pound, because British pound hasn't had too much negative pre-exit news so far. Another thing about British pound is that people are expecting the pre-exit cause a lot of low unemployment rate. Basically, there's a lot of migration. Right, a lot of migration out of UK, because a lot of European citizens decide to not stay in UK after the Brexit. The future is just so uncertain. So if they're moving back home, you already read the news that a lot of companies couldn't find workers. If that's the case, they have to raise the wages. If the wages go up, then the inflation will also goes up. Obviously, that's just a hypothesis. We have to see what happened to the labor market data before we jump in the gun and make that predicament. But as for now, if tomorrow the CPI is going higher, obviously cable will go higher, but also I think British pound will continue to benefit from that. Right now, really the most disrupted or the biggest risk for the market rally to stop, I think there are only two. The one is that the collateral effect, if people stop buying. Okay, if you have last buyer, doesn't matter for whatever reason, if they decide to take their profit, and that causes a little bit retracement, which causes a lot of panic, and the retracement become a reversal, that will see a huge downside. But that might be short-lived, because that's just a price action. Second thing that's more worry is the inflation. If the US inflation shoots up, so if the US inflation shoots up, that means the Federal Reserve have to hike interest rate further. That will obviously shock the market, because that means dollar will rebound to gain more strength. If dollar become more expensive, that will collapse the equity market in US, and that will also cause the bond market to drop, because now the interest rate has to go higher. Now the bond market has already A lot of people say bond market already in a better market because the 2-year yield and 10-year yield are already goes a very, very high point. Let's see if we can see it. So this is just, just to give you a very quick, broad view of the correlation of each market. Of course, it doesn't mean it's going to happen in that way, right? It's something you have to understand. Also, it does not mean it will happen tomorrow, right? It's just to give you some fundamental reason in mind. So government bond 10-year yield. So this is not a yield. This is a 10-year price. I think I should go to daily. Just give me 1 second. And I'd like to look at line chart. So U.S. bond yield. Okay, here 10-year yield. So yeah, so the yield, as you can see, continue to go higher. Now obviously the yield and the bond price is inverse correlation. So the bond price really dropped. The 10-year yield continue to go up. Now again, why would not US dollar follow this? Because as I say, although the yield will be the guideline for the Federal Reserve, but it's not going to change the fact that there's a less interested party to buy US dollar. But it might. Okay, one of them has to follow each other. So either the US dollar will start following the yield, or the yield will start following the US dollar, or you might see an extended period of inverse relation. It might happen, right? Nobody knows, because we're at a very new economic cycle, a very new economic era right now. The reason is because right now so many technology has come out. So it's not like before the old economic model will not be disrupted or changed. It will be, again, because of the new technology. We might really have the situation that you have a very low unemployment rate, everybody has a job, but you don't have a wages inflation pressure because everybody's getting a very little pay. Why? Because we all rely on the machine. The machine can do more than us. So we still need the people to operate machines or robot, but there's no demand basically to pay workers. So it could be the future. We never know. So what I'm trying to say is that yes, in the traditional economic sense, the yield goes higher, US dollar will follow, or the other way around. But it might not be that case for now. Now, Aussie dollar obviously also had a very nice rally, direct beneficiary from the commodity market and dollar weakness as well. Now, Aussie dollar will be something very interesting to buy as well. But again, everything, if you're not in right now, really don't jump in. Wait for a little bit retracement. It might not happen this week or next week, but it's really better than you buy at a high. Okay. Euro pound, not so much happening in terms of a daily perspective because euro is strong, but also British pound is also strong. Dollar CAD continued to go lower, and the Euro Swiss also going higher. Now Aussie New Zealand, let's talk about New Zealand, right? New Zealand is a very interesting currency right now. The current risk on sentiment obviously benefit New Zealand a lot because they are the most high yield currency, as you can see right. Okay, well, I couldn't find it. It used to have a currency. I think maybe it's a calendar here. Just give me a second. Yeah, right here. So you see 1.75%, that's a current bank rate. So they are the most high yield currency. So a lot of people like to buy it against Japanese yen as a carry trade. But that's a global market. In terms of the domestic business, today we have the New Zealand business confidence. Look at that, -12. That's a huge drop because you expand out. The last time you have a negative number was in 2015. Why would business lose confidence over the government? Well, obviously, same as last year, because the new Labour Party government was deemed to be more like left-wing, and that obviously are not so friendly toward the business environment. However, that doesn't mean New Zealand dollar will drop. That's just something to keep in your mind, that the current rally in New Zealand dollar is not really any strength from the country itself. It is really from the global market. So once the risk sentiment shift, we might see New Zealand drop very fast. Because of that, I'm actually interested to sell New Zealand, to sell New Zealand against other currency. Obviously, I'm not going to sell against dollar because dollar is really the weakest currency. but I'm interested to sell against other commodity currencies such as Aussie or New Zealand CAD. Okay, so let's take a look at what happened. I had few trades I took and out between last video and here. Okay, so I'll try to do a video once again, once a day, just to that people can learn more and take advantage of it. So basically, I did took Aussie Swiss the beginning of January. I like, again, the fundamental why Aussie will be stronger than Swiss. As I already mentioned, the current risk on sentiment is very, very strong. So I got in actually at this box. I saw this breakout. Let me close this. It's too confusing. So I saw a breakout of this regression channel to the high point of here. I put my stop loss here and basically just write this up. I had my one-on-one. I didn't take it because I was expecting a further upside for Aussie, and that was not the case. I think we had a one or two negative data from Australian that obviously caused the pair to couldn't rally even further. So basically, it got stopped out at break even. So that was one of the trade I took, I think 2 weeks ago. That is already out. Dollar CAD, of course, this trade was in last year. I'm still in this trade, moved to break even already, and I'm really looking forward to see what's going to happen this Wednesday from Bank of Canada, because of Bank of Canada raise interest rate, obviously going to be very positive for Canadian dollar. If they don't raise interest rate, which I think is not a big surprise, it's still gonna be very positive for Canadian dollar in this quarter, because then we will have more probability for Bank of Canada to raise interest rate in March. There's few reasons they might not raise interest rate, right? Although you have an expectation of higher 0.25%, few reasons they might not raise interest rate. First is the real estate market. They have introduced a new mortgage rule starting January 2018. So a lot of people thought the biggest market in Canada is the oil market. It's not really the case. The biggest market is the service sector. And one of the biggest component in the service sector is the real estate. So Canada can definitely not afford to lose the real estate market. And they already introduced this mortgage rule this January. So right now they already decreased a lot of housing activity for January. That means if at this point they raise interest rate again, they will curb the housing market even further. I'm not sure if this one of the things they will consider when they raise interest rate or not raise interest rate, but that's something worthwhile to think about it, because they might not raise interest rate just because of the concern for the real estate market, or they might just go ahead and raise interest rate. The second concern, of course, is the NAFTA deal. We had a CAD dropped last week because the worry Donald Trump is going to pull out of the NAFTA deal. Obviously, I think that will be a bigger risk for Canadian dollar or for Canada overall, because that is even more important than the interest rate or the real estate market, things like that. Because if they curb the real estate market, that would just be a short-term to medium-term activity, right? The mortgage rule is just for the first-time buyer, so it's not really going to affect a lot of a wealthy buyer in Canada. But if the NAFTA gets affected, pull out completely, that's going to be a big shock for the market. Canada has 70% of export to the US. If they lose this big market, it's going to be catastrophic. Not only for Canada, it's going to be catastrophic for US as well, and not to mention for Mexico. So I hope that doesn't happen. I don't think it's going to happen this month, if it's going to happen, but we will see what happens. That's really one of the biggest major risk for Canadian dollar. Okay, so my dollar CAD, of course, I'm still in, set to break even. I was hoping, we'll see what happens Wednesday. And see if we can have a further drop to the downside. I do hoping, or basically, it doesn't matter if Bank of Canada going to raise interest rate or not. I do hoping we have a buy rumor sell effect. That's why I took another CAD trade. I took a CAD yen. I was looking at CAD Swiss. or Cayenne. Okay, eventually I pick Cayenne because it break out of the channel already, right? Where in Cat Swiss, not really have any action. We're still within this channel. I took a Cayenne, obviously got filled in at the top of this box. Stop loss here. I'm still like a little bit drawdown right now. So we'll see what happened between today. Obviously today is Martin Luther King Day, so we don't really have much liquidity. But we'll see what happened later on today and all the way until Wednesday. We'll see if we have a risk on, we have a buy rumor, sell fact, so I can actually move to break even for this trade. Newsy, as I mentioned, something I'm looking to sell, but I do need a catalyst. I don't want to, because the risk sentiment is very strong right now, so I really don't want to sell Newsy in this kind of environment. Newsy Cat will be something very interesting. If Wednesday Bank of Canada really raise interest rate, then Newsy Cat will be something I'm interested to sell. Okay. Now obviously Euro is very strong right now. So I took a Euro Yen last week again at the top of this box, already moved to break even, and we'll see what happened to Euro if we can have a further rally breakout in 136.64. If that's the case, I will try to ride this trade. Obviously, Euro Yen did not rally as much as Euro Dollar because the Japanese Yen strength. But all in all, still not a bad trade in terms of the fundamental bias. For Euro Swiss, I couldn't get a chance to get in, so this one obviously rallied way much higher. Okay, but I just didn't have a chance to get in last week, so I picked Japanese Yen instead of Swiss franc. I think it's because I remember. It's because I'm already at Aussie Swiss. That's why I couldn't take a Swiss franc trade. I try not to overexpose myself in more than one currency, or same currency. Euro dollar obviously biggest winner of this week so far. You drop out. Now I was very interested to buy Euro dollar, but because of the CPI from US, last week I basically stopped because I feel that we already have a very negative dollar, and the CPI data was not that negative for me to get in. So obviously I didn't expect a further comment today for ECB to boost the euro. Euro Newsy will also be something I'm interested to buy, but I'm just kind of worried, just as I say, that euro is really at the all-time, the bet is overextended. A lot of people are buying euro right now, so I really maybe want to see a breakout in this channel first before I jump in to buy Euro Newsy. Aussie dollar, again, we didn't really have any chance to get in for Aussie dollar. Aussie Newsy, now Aussie Newsy, again, it's very interesting. I know a lot of people like this pair, but first of all, both Aussie and Newsy are direct beneficiary for the risk on sentiment. Why did Aussie lose strength against Newsy? That's something you have to take into consideration. All in all, Aussie does not have that much strength domestically versus Newsy. A lot of Aussie strength really come directly from the copper market and iron ore. So once that part shift, you will expect to see Aussie lose even more versus Newsy, or you might see this pair goes in a sideways. So we do need, at least for me, I do want to see a good catalyst for Australian. I don't want to see a catalyst for copper or iron ore. I want a real catalyst. Maybe the inflation is higher than expected. Maybe they have a good GDP. Maybe they have a good labor market. All right, I want at least these three major indicators: inflation, employee, and GDP. If one of them between now and then can have a very good data, then I will be interested to buy Aussie versus Newsy. Otherwise, I think you might go with Aussie dollar or Aussie yen, Aussie Swiss will be a much safer trade if you want to ride down the current sentiment. Now Aussie yen obviously looks like we find a support at 33%, might continue to go higher. I'm already overexposed in the Japanese yen, so I don't want to take Aussie yen. Also, I really want a retracement to 50% before I get in. So it's not that attractive for me for now. Okay, Aussie Swiss, as I mentioned, same thing. I want to at least some sort of retracement down here, all right, before I can get in this trade. Okay, so I want to maybe, the good thing is this one already break this channel right now, so we might see a further, see, we already broke out, so I want to see this low gain take out, and maybe we reverse the trade to the downside and to taste the 50% before I consider to take this trade. Okay, so right now we're not even at there, we're 23%. So really, I think best area for me to even think about it will be here. Okay, so if we have something right in this area, that would be good, providing if the risk sentiment is still very positive. Now, dollar obviously is the worst currency right now, but as I mentioned, we might really overextend it in a lot of dollar pairs. So I wouldn't really just get excited, say, all right, dollar Swiss, I can buy at this 60%. I wouldn't really do that. I really want to see a catalyst for the US dollar to go up. Now, mind you, we might see US dollar reverse just because there's a lot of, might be some trader decide to take some profit. But for the US dollar to go upside in a more certain way that you want something comes from the economy. And right now, the most prominent one will be the inflation data. So if you see any sort of inflation data that's going really higher than expected, that would be a good cue for the US dollar to reverse its course for 2018. But same thing apply, unless that happened, 2018 might still be another bearish year for the US dollar. Dollar yen, on this one I got stop out at break even. I don't know if I mentioned in my last video, but basically, sorry, let's go back to 8 hours. So basically, it break out this low. I think my break even was at somewhere here. So this one break out this low. Now this whole cycle is still here. It's still valid, right? If you draw from the longer degree time frame, like 8 hours, we're really still here and now tasting 60%. Now for Japanese yen, as I mentioned, no matter how good it is, the one thing is not going to change. They still need the yen to stay weak in order for their export business to keep going. Obviously, 110 will be a very critical technical support, and the last one, of course, will be 105 or 100. Right, 100 is really way below here. So 110 will be the first one. You can see how you're going to react to this. Okay, so that's pretty much it. And for British pound, obviously, I was really tempting to take it. Obviously, I didn't. I missed it. I chose other pair. Pound yen, pound Swiss, all rally. Cable also rally. Now for British pound, I didn't do anything for these past 2 weeks because I didn't have a good catalyst to take it. So again, you have a strong rally in cable. That's because dollar is weak. It's not because of any good news from Britain. However, that might change tomorrow if the CPI come out higher than 3.1%. So we will see what happens, because this will be the major factor. Okay, this will be the major factor for Bank of England to turn to hawkish or to possibly raise interest rate. Okay, and another reason, as I just mentioned, the labor market, the wages, that might push Bank of England to act as well. So let's see what else we have. Oh, that's the cryptocurrency account. I'm thinking of maybe putting some speculative money into it, because a lot of people ask me, and I didn't really trade my main account in the cryptocurrency because I, frankly speaking, just don't know how to trade it. I don't have enough knowledge in that aspect. But in terms of speculation, I think, yeah, if I maybe put 1% per trade, things like that, then I am still able to maybe put 0.5%, 0.7%. It's just like gambling for me, basically. If I watch UFC, I like to gamble, so that would be my concept for playing the cryptocurrency. Doesn't mean it's a gambling. For some people, they are cryptocurrency trader. They obviously know a lot more than me, but for me, that's basically the way I look at cryptocurrency. So for me, I do maybe want to play around more like a sports bet. Okay, so aside from that, now this week, obviously Monday is Martin Luther King Day. It's already passed today. Tomorrow, CPI from UK will be the most important data. Then you have S&P Chairman Jordan speaks. I don't think it's gonna shock the market for S&P. Wednesday, obviously, the biggest events were Bank of Canada rate decision and the press conference. Okay, this is actually this will be a very volatile day, I think, not only for CAD but for US dollar as well. So this will be a very, very important event. I think maybe this might be the most important event for this week. Then obviously the employment change, as I mentioned, I'm looking to buy Aussie if we have either a good employment, a good GDP, or good inflation. So if we have a good employment, and if the copper market, iron ore market continue to be supported, then I will be interested to buy Aussie. Which pair I'm going to choose? Well, either Swiss franc, Japanese yen, or Aussie Newsy. And if Tuesday, tomorrow, the GDP price is a negative number, that will give me an even more good reason to buy Aussie Newsy. So we have to see what happened on Wednesday. Thursday, we're coming out from the Chinese GDP. This will be important for the global market, okay, and hence it will also be important because now everything is correlated. So obviously, expectation is a little bit lower, but if it's come out as expected, then it's nothing to worry about. What you need to worry about, of course, if something negative really happened, if a negative surprise happened, that's going to really weaken the global market, I think, and that will be a bad sign, a very bad sign, because we are in a very strong risk on sentiment for now, for these past 2 weeks already. So we have this will be important data basically. And then building permit is not really important. Crude oil inventory, not really important. Now a lot of people say that the crude might have a build, right? Why? Because now the oil price continue to go up. So of course a lot of crude producers trying to take the advantage. I think this is just the same story as last year, right? You have an OPEC member continue to cut the oil output while you have a crude producer continue to take advantage of that. Don't think it's gonna change this kind of a TikTok war. I don't think it's gonna change too much. Obviously, if you have a higher crude build, it's going to hurt Canadian dollar. But all in all, it's not going to be as important as a Bank of Canada rate decision. In fact, if you miss the rate hike, if you miss the CAD rally, then the crude build might be a chance for you to get in. Okay, that's just thinking that way. Friday, the retail sale from UK, not that important, and pretty much that will be it for, I think, the major events for this week. So again, tomorrow, UK data, Bank of Canada on Wednesday, and Australian data on Wednesday will be something looking to trade. Of course, Thursday, Chinese data will be something to look out for the global market. All right, that's it for this week's weekly analysis. I'll try to do a daily video again from tomorrow until the end of the week, and just basically resume back to the market and producing content for you guys. If you have any questions, again, feel free to let me know. I'll be more than happy to help you out. All right, thanks for watching. I'll see you tomorrow. Bye-bye.